Good weekend and good President's Day weekend to all of you with your Ira Epstein Metals Market wrap-up. And this is your weekly edition, and we are here now on Friday, the 17th of February, 2023. Well, it's an interesting time. You know, the markets plunged today, and they made everything back up in the gold market. Look at this move in the silver. It went from the lows to almost the highs. The copper market even came back. So what's going on? Well, could be a combination of, it's President's Day weekend. They don't celebrate that abroad. This is our President's Day weekend. It could be the market sold itself out. Could be a lot of things through there. One of the things that's not is the end of my sale. So before we go anywhere, we're having our President's Day sale. It ends on Monday. You want to take advantage of it, I hope. If you're not a subscriber to my information, you can see that right there. You can get 50% off my morning future subscriber video. You can get 50 off if you want the Spider ETF video. You can get 50 off the combination of the two, and you can get 50% off the full research, which is the combination of my written updates, which have special updates. Like yesterday at 3 in the afternoon, I put out go short in the S&P. Turned out to be a heck of a trade today if you saw where we did some covering. Got lucky, I guess, but it doesn't matter. There were reasons for it. They're all explained. Every trade has an explanation. The videos give them. We lay out the trade, at least I do, right for you through that. Now, you can do this on a monthly. You can try it for 1 month, and that's the end of it. Once you try it, you're back to regular price. So you can buy it for a year and say, hey, I've watched this guy long enough. It makes sense. Again, go to our website. You can click up here at any point in the video. It'll take you right where you've got to be. So that having been said, let's go take a look at gold. The gold peaked back here just recently. Now, what do I mean by peaked? Well, if you and I step back and we go back right here, it was 1949.80. This is on a closing basis. If you remember, I thought the market was going to have trouble as it cleared a path towards 1985, and it didn't get far from it on the daily chart. Now it has gotten a correction. Well, correction's not the break of a trend. The market still has upside bias, and big support awaits the market at 1804. When we look at a weekly close, is the market going to be able to make it down to the weekly low of the 1804 area? Well, that should be very interesting. We'll see. But the bias is up. When a market is over the 18-week average, I define bias as that. It's up. Close under it, the bias is down. Why is bias so important? Bias is a filter on the other signals. So if I have upside bias, but I get sell signals in the market, I don't take the sells. I'm looking for the buys. I want the bias to be with the buy of the market. You'll find momentum tends to work better that way. Then we come and we look at the weekly chart. Well, you certainly had an outside week down, and you've had all the follow-through to it so far. You can see how the market still has a pattern of higher lows, higher highs, and that stays in place until you get under 1719, which is a heck of a long way off. That's $120 away approximately. More likely, the big support in this market awaits right here. 1807.10, 1804. That is where I expect the bulls to make their stand. If one were short and playing that this market's going to break because interest rates are going to keep going up, won't matter. That is the number that I think that the bulls will make their stand. If that gives ground, then the 1730 level from the 200-week, but I don't think they'll wait for that. That's where I think they're going to make their stand if they get lucky enough. And those averages will move up a little bit when the market reopens Sunday. Remember, we do open Sunday night. You have abbreviated trading in the metals. They'll end up at noon closing on Monday and reopen again at 5 p.m. This is all Eastern time. When we look at the Bollinger Bands, you were riding the band, and again, staying over or under a Bollinger Band only 5% of the time. Learn to put that into your portfolio and work with it. And here's the key. From this is where I got bearish the market in terms of looking for a break back to these numbers. Why? If you take a look, and if you've taken especially my enhanced Bollinger Band course, this is a fully embedded reading. If you lose it by closing underneath 79, It sets up the potential, strong setup. The price in these moving averages, the closest of the two, the 100 or the 18, just the closest of the two. That is what I'm looking to hit. Well, they're just literally on top of each other. You might even get, when we reopen on Sunday, the 18-day average flipping over the 100, which is a bullish signal. So I am expecting people to deploy funds on the long side of gold at that number this coming week. The gold-silver ratio still favors gold over silver. When you're over it, that's what you do. We rallied to it, and we haven't even had a correction. We went right through that average. Normally, you'll get back there, and you'll fight a bit of a battle like this. You'll come down, you move again. But in this case, silver is just acting absolutely terrible. It's back down to the 200-day average. Unlike gold, the two aren't together. Number two, the market has not got a pattern of higher lows and higher highs. It's got a higher high and lower low pattern. But here too, let me just show you the beauty of when you learn how to work with these different slow stochastic studies and Bollinger Bands. Here's the market in a fully bullish formation. You've been going up. The moment you lose that, I'm looking right away for this 18-day average at a minimum. Why the 18? It's over the 200. And here is the market, the next move. This is the 10th, and this is where you're at now. Tell me that that doesn't give you a pretty good idea. Momentum often leads price. Learn how to work with this. I work with you every morning when we do these videos and teach it and hammer it home. I also, as part of when you're my subscriber, if you write me a question, I'll create a small video and give you the answer with it. Tell me other services that do that. Not many people do. In the copper market, as bullish as I am copper in the long term, and I'm probably the biggest bull you'll run into, the problem has been that you're not getting the demand worldwide yet for it. Now, what you are getting are problems with production. If you look at Peru and you look at the two largest mines there, they are in maintenance mode. There have been protests all through Peru. The mines especially are in trouble. And production is just, if you look at energy usage, and I wrote about it in my full research, there's something else you get. I write about all these different subjects, and I give you graphs to prove things. I make my reports, by the way, simple when I write. I want them to be read in 2 minutes. I'm not interested in writing a book every night. Remember, I write one at 11:30 in the morning, the other for the evening read. They're meant to be short, right to the point with the things we're going to focus on. I won't stick with copper every day. I won't stick with metals. I'll go to the grains. I'll move to the softs. I'm all over the board, which is where you want to be as a trader. But you can see you've been correcting now. You had an outside week up. That's often a sign the market is trying to find its footing. Now, if you take that out, then I think you're going back to 387 level, the 18-week average. Until it's taken out, this could be where the market's starting to say, okay, I'm getting ready to make another move. But you're overbought. Overbought readings occur if one of the stochastic readings is over 70. Embedded means they're both running over 80. Copper doesn't embed often on the bull side. You do see that, don't you? You did get a bearish one there, but that's about it. When we look at the platinum, for me, the way I would teach it, if you were sitting next to me, you get an elbow in the side and it says, cover all your shorts. You're at the Bollinger Band. You're oversold. You don't need the last penny of this trade. Time to walk away from it. Dollar index, resistance, you heard me. I know everybody's super bullish. I'm calling on the weekly chart. You're running into your resistance levels in the 105.15. That doesn't mean that it has to stop there. Not in any manner. The market's got higher highs, higher lows. It did have this to start, but once you took that out, and that's why I left it there, you've carried here. Now it's got to prove it can get and stay over 105.15 and mount an attack from there, which it might be able to. By the way, look at the embedded reading. It calls that you're going to get to that 18-day average when you lose it. So you put this all together. You hear me talk about this every night. Why not learn more? Take the step. Invest, if you want, $4, and you'll see my morning video. We know we hook you if you take a look at it. You get in. For 1 year, you get half off. This is a heck of a deal. You decide what you want to do. IraEpstein.com. It's all explained when you go under research on our website or you click up here. Have a great weekend. I'll catch you all Tuesday because with Monday, the President's Day, abbreviated trading, I'll take the day off and be back with you Tuesday. Take care now.